Sir, we are live.
Yeah, thank you. So welcome to the second session of live session. I think, I see only Mr. Ranganathan Ramani to be there. I think my request to you, sir. I think you also raised your hand. Can I? Yeah. Yes, sir. Mr. Ranganathan Ramani. You're on mute. Am I audible? Yes, please, sir. Mr. Ranganathan, I think you can go ahead. I think you're on mute. Can you unmute and then you can go ahead? You raise your hand, please. Okay, then can you type it in the chat box, sir? I can. Maybe, or you could possibly log out and log in again. Possibly try that also option. Yes, sir. It's muted again. Ravi, call Ravi.
I think.
Ravi, I think they are not able to unmute. Can you just see if it is possible?
I think you are in the non-mute, sir.
I am on unmute, but can you unmute Mr. Ranga?
Unmuted only, sir.
No, he's on mute. Yeah.
Hello, I think now I am audible.
Yes, sir. Audible, sir.
Yeah. Good evening, sir. I am enjoying your session. Now, I have two questions. One is, what do we mean by sundry debtor, especially in a service industry? Could you clarify that?
Yeah.
And also, what is the equivalent of inventory when it comes to service industry, let's say an IT services company?
Okay.
Yeah, thanks.
Sir, sundry debtors is all the receivables that are you are yet to receive on the sale that you have made. In a service industry, on the services you have provided, you are yet to receive some money on the services that you have provided. So that bunch is called, they are called debtors. So we pool it together and call them as sundry debtors. That is any receivable that is you have provided a service for which you have to receive money. They are called as sundry debtors, or they are called as debtors out there. I hope I'm clear on that front of it.
Yes, sir. In fact, it is same as operational. Anything related to operational income, which is due, that is called sundry debtor.
Yes, anything with regard to operating, perfect, sir. Anything with related to operating income, which is due, is called sundry debtor, sir. Perfect. Now, in terms of when you come to inventory in a service industry, there will not be any specific inventory unless, I mean, even if the intellectual property IP, what you have will be capitalized per se. That will not be a current asset that will be there. So unless some part of it we are going to write off this year, only that portion we will keep it as the inventory. But inventory will not be there in a pure service industry out there.
Yeah. So there is no consumable, like in the sense, in our service delivery of services, nothing called which get consumed. No, even though the man-hour is roughly a consideration, right?
Yes, sir. Those consumables, whatever it is, it's different. I mean, the typical assets of your office consumables, that is the different. That is not, that is also, they call it as stores inventory. So inventory per se for your operation, there will be no inventory for your operation. There is nothing which is going to be in stock, which is going to be in a stockyard, I'm going to pull it. That cannot be there, especially in a service industry.
So what will happen, sir, if let's say we have 100 employees, average productive hour is 8 into 25 days, 200 hours, right? So isn't that sort of available inventory, out of which 160 is consumed in a month operation? So 40% people are sitting in the bench. I mean, 20% of people are sitting on bench.
No, it will not be, because inventory is only what I own. I don't own my employees. I don't own the employees working hours. Supposing 10 of them are absent tomorrow. You don't own those hours of the 10 employees as of now. So inventory is only what you own. Today, when we talk about HR accounting, there are companies which have used HR accounting where they try to do human resources valuation and other things. But strictly from the accounting perspective, this cannot be valued because this is not what you own out there. The employees, there are 100 employees, each employee working 8 hours. Fine. If the employee is there, they will work for 8 hours or they may not work for 8 hours. I don't own the employee per se. I cannot, whereas a machinery will work for 8 hours. I own the machinery. That is why it is a fixed asset for me. Whereas employee cannot be an asset in that sense. Only the intellectual property of that employee is an asset, but intellectual property is unmeasurable. The only measurement we use for intellectual property is all the patents and what do you call it as the technical know-how, etc., what we have out there.
So when we make a service sales, we bill in terms of employee man-hour.
Yes.
Many IT organizations do that.
Yes.
So there is no corresponding expenditure on this side. No, I mean we bill them. There's a revenue based on the number of man-hour, but there is no corresponding.
The corresponding thing is only the salary what you pay for them. That is all what you will say. Because if you are paying per man-hour, then it is a per man-hour rate. Otherwise, it is 100 employees per man-hour I bill, and the other side is only the salaries what you pay for them.
Okay. Thanks, sir. That clarifies.
Thank you, sir.
Thank you so much.
Yes, Mr. Hardeep, I think you have a question on the chat box. Let me go to what kind of questions will be asked in the exam, MCQ or objective, like preparing the whole financial statements. I will not ask in the interim exam. It is only MCQ, sir. Harshdeep Kaur, yeah. Any other question? Madhu Babu or even Mr. Ranga or Harshdeep Kaur?
When will you be launching a session on company evaluation? Will it be on NPTEL format?
This particular course itself, I launched the last part of it. The last 3 weeks will be on corporate finance, which have finished the recording. We are not doing on valuation per se. We are just, it's a very basic corporate finance course. And corporate valuation as such, I float an independent course, but I have not still done the recording for NPTEL. Maybe that is a plan for the future. Maybe to 2024, I'll try to do that, sir. I teach in a physical format at IIT, both for the executive MBA as well as the regular MBA and few other places. But I don't have a recording of corporate valuation as such in an NPTEL.
Thank you, sir. We will wait for that course. I will wait for the course. Yeah.
Thank you, sir. I hope you are enjoying. I mean, there is some value add from the course. That is what my worry is, because we have done about 30 hours of recording and we are almost edited it. I think we have the last 3 hours to edit, which we will do it tomorrow. So I hope there is some value add from the course.
Absolutely, sir. In fact, I had taken a course on, though I'm not a finance professional, I've been an engineering graduate. working in IT industry, but I never understood this basic concept. So many terms we use liberally without realizing the full meaning. Now this course gives me a lot of clarification, and I also recently took up an examination on independent director certification.
Yes, sir.
There also we have gone through many of these topics.
Yes.
But they are all rushed through. Here I'm getting absolute clarity when you explain. Thank you, sir.
Thank you, sir. Thank you. That entire 49 modules for independent director, because even I cleared it some time back on all the 49, as well as the exam conducted by the Minister of Corporate Affairs also cleared that. Yes, sir. Thank you. I'll just take the next question from Harshdeep Kaur. Do we need to study from the books that you prescribed? All videos will be sufficient. As I'm already a commerce student, I've already studied these topics, and will just look like a revision. I think the videos are good enough. The idea of the video is as put in by Mr. Ranka. So the idea is you are familiar with the terminologies. That is the only thing. Because if tomorrow you just happen to see an annual report or a financials of any company, you don't get scared to open that financial part. You are confidently you're able to open the financial part and see that and look at it. And you are not allergic to it. So that's the whole idea. I'm not, as I indicated in the course itself, I'm not trying to make an expert in accounting out of this course, but give you a fair idea about the whole concept of accounting and finance. Yes, Mr. Madhu Babu, any question from you, sir?
Sir, good evening.
Yeah.
Sir, good evening, sir. I'm Madhu Babu. Course is
Sir, you're not
impressive,
audible, sir.
But
You're not audible, sir.
hello.
Yeah.
Really excellent, sir, and your narration also very impressive. But like other NPTEL courses, we want text notes, sir. Is it possible?
Text notes are getting prepared.
Till now, no problem.
Text
Thank
notes,
you, sir.
Yeah, text notes.
Thank you very much, sir.
Transcription of my discussion is getting prepared. I think Suhail, for 2 weeks it's ready. Yeah, for 2 weeks I think it is ready. They should be uploading it in a day or two. I think for all the 12 weeks, just the transcription of my discussion will be uploaded, sir.
Thank you, sir. Thank you very much.
Thank you. It is just a transcription of my discussion.
Okay, sir. Okay, sir. And I also completed same course from IIT Bombay, sir. But your narration and your explanation is really excellent, sir.
Thank you, sir. Thank you.
Yeah.
Well, I used to be in the industry. From industry, I moved to academia. And I've taught in India as well as outside India also in a couple of places. So it's just that I enjoy teaching. That's all, sir.
Thank you, sir.
Thank you. Thank you, Ashdeep. Thank you very much for the compliment. Thank you. Yes, Mr.
Ratio analysis, what you had covered in the 5th week, are very, very useful. But compared to the earlier 4 lessons, this was a little bit rushed, but I had to go through a couple of times. It was very interesting. Okay. Because we can talk forever probably, but it was little bit rushed up compared to what we have been used to for 4 weeks. And can you take some example of, again, these ratios in the context of only service industry? Because since I am from IT industry, I would like to have some couple of examples. Yeah.
Sir, I would still look at my operating revenues per employee, because we are talking about the per employee. I'm again getting back to that. So when I look at efficiency, I'm looking at the efficiency. I'm going to look at operating revenue per employee. That's going to be some valuable measure for me, because you will always do that, because what is the revenue what each employee is going to look at or is earning and etc. That's going to be very useful in your in your case. Debt equity etc. will not be useful, because I don't think as an IT industry you will have much of debt. Even if you have debt, you will have only short-term debt out there. So those kind of typical capitalization ratios will not be really useful in this particular case out there. So more and more, it will be centered around what you call it as the employees and employees, the revenue per employee, the cost per employee, what we are looking at, and those aspects will be more useful.
Yes, sir. I think that is true. One additional added point there I would like to get it clarified is about 10 years ago, 15 years ago, the manpower-based billing was a revenue model for most of the IT company. But today, it is the technology skill levels are varying so much, and no one individual can possess all the skills, and no company will be able to hire anybody in one person in full time.
Yes.
So how do we manage the skill? How do we quantify the skill available in a company in terms of finance?
In finance, yes, there are models available or methods available to quantify the skill levels. As an accounting, to be very precise, in the balance sheet, in the income statement, in the balance sheet, you will not find any of those assets sitting on the balance sheet per se. Typical companies, because your tax laws doesn't allow you, because we don't value the skill set, because we don't own the skill set. Again, it goes back to where we own. But in terms of valuation, yes, there are methods of valuation. Now, what are the ways they look at is a couple of ways. One is, what is the cost of replacement of that skill set out there? That is one method that is adopted, one of the methods. The second method that is adopted is, when I look at this, a particular skill level, what is the projected revenue that I can get out of the skill level that is going to be discounted to the present value or the current price out there. This is the second method what I will have to look at in terms of the skill level valuation. Third method is, if I have to take a fresh graduate and then train him to and bring him to this particular level, what is the amount of money that you are going to spend and what is the future value of that? You will have to basically calculate at whatever is your discounting rate and come to that. That is the third method that is basically available for valuing the skill set out there. But that is at a next level, of course. But that is not per se fitted to the balance sheet or the P&L.
Yes, sir. Thanks. That explains. So in future, let's say AI-based model becomes the dominant source of revenue.
Yeah.
And whatever investment we make in the AI, building up AI capability in the form of a machine or high-end, high-power computing systems, etc., won't they be called as a capital asset?
When we talk about AI, will it be a capital asset? Yes, if you are able to own it. If the AI model, what I built, I'm going to use it, the AI model, I'm going to build some robotics out of that, and I own all those things out there, then whatever is the software or the model that I built, I own it, then there is a value attached to it, I'll keep it as an asset. Even in your IT company out there, as of now, I can have an in-house developed software. And that in-house developed software, I can always take it. I have developed it by spending so much of time and value and everything. And I can always take it as an asset. It cannot be tangible. Yes, it can be taken as an asset. Because that software, what you have developed, it is your core, your own. You basically have the right on that software. So naturally, it will go back and sit as an asset. And then you will be able to take it to the balance sheet as an asset.
Yes, sir. Thanks, sir.
Yeah, sure, sir. Any questions I can take? I mean, not a problem. I mean, as far as possible, I can try and answer. That's all I can tell you. I mean. Yes, please. Any other question? Mr. Ramakrishnan or Mr. Srihari?
Good evening, sir.
Good evening.
So, capital work in progress. So, as per IFRS, under which heading you will record, sir?
Sir, IFRS, right now, I don't remember because I'm not really conversant with the IFRS numbers, though I teach. When I teach, but off late, I'm not doing that, so I'm not really conversant with that. But I'll have to look up and then get back to you on that, sir.
Okay, thank you, sir. So I have another one.
Yeah.
The way how you are teaching is really very nice. Like instead of going journal, directly started with balance sheet. Like in Tally, when you do, we understand where it goes, how it affects balance sheet prepared as on the date, On particular day, it was really very nice. It enlightened me to teach in the class also. It was very nice, sir.
Thank you, sir.
Practically, sir, my question is, practically, those who is using Tally software, they use with Tally software.
Yes, sir.
You follow the ledger. I'm little confused whether use journal ledger or directly they will go with accounting equation. How they are doing so practically?
Sir, in a moment you use a software, that software takes care of it. They're not really going to post a journal or post a journal to a ledger, etc. Like exactly what we did. They just directly take it and group it together. For example, I make a purchase. So typically, what you would do is I would say purchase as account debited, and if you pay cash account credited, and etc. I mean, I've not taught debit and credit to this class. Let me also confess that, and I don't intend to teach also. But in a tally, what happens? Directly, moment you see purchase, it will go and get grouped with the purchase. So that ledger account automatically gets formed out there. There is no journal entry that gets passed and then gets posted out there.
Yes.
Now, for the benefit of the people who joined here, journal, ledger, I think I've also said in the class, those are the primary books of entry. There we start with debit and credit and so on and so forth. I don't intend to teach debit and credit out there because, accounting can be learned without debit and credit. That's all. That is what we
100%.
do.
I really enjoyed your class because of this particular point only, sir. Because many used to feel debit credit is so confusing. So many get graduated without knowing debit credit.
Yes,
and even if you understand how it comes, how it goes, expenses or income, we can do it without debit credit.
Yes, sir.
And it was really very nice. I really enjoyed your class, sir.
Thank you, sir. Thank you. Well, very simple example I'll see. Normally what we say, anything that is debit is always good, right? Anything which is credit is not so good because you are on credit. You have to give money. You are on credit. Yes. But what happens when your salary gets credited, your salary never gets debited to your bank account. Right? Yes. So moment right there, the confusion starts.
Yes, sir.
Right? That is because as far as the bank is concerned, more and more of your money is with them and they owe you the money. That is where salary gets credited.
Yes, from banker's point of view, it is credited. From our point of view, it's debited.
Yes, the debit and credit one can get confused quite a bit on that.
100%, yes, sir.
I certainly felt, because though I'm a trained accountant per se, I certainly felt that I don't need to basically, teach this particular aspect for learning accounting. I thought I could just do it without that.
Correct. Very nice, sir. It was really very nice. And I really enjoyed the class, sir.
Thank you, sir. Thank you.
Thank you, sir. And nice talking to you, sir.
Thank you, sir.
Sir, one more question I have, Ranganathan again. Yeah. So in the we talked about indirect and direct method of building the cash flow statement.
Yes, sir.
And in that, in real life, people will be most of the companies will be using automated software. So the cash flow is automatically prepared from the ledger directly, right?
Cash flow is automatically prepared from the ledger directly. Yes, agreed, sir. Agreed.
So only the auditor perspective, he will try and do the reverse calculation and see whether it is matching.
They will do the indirect method normally, because what happens is if I have the P&L, the balance sheet, and the cash flow statement, all these three corners of a triangle, they will all have to meet somewhere.
So actually, there is nothing. Direct method is not of much
direct method is not of much use. Direct method is only for us to understand. That's all.
Correct. Thank you.
It's very simple. In a case of Satyam, when the entire thing happened, they said that they are overstated debtors by about 5,000 crores or something. If they had overstated debtors, then basically what would happen is there would be enhancement in receivables also. That should also be there in the overstated debtors. That is too much of receivables that is there. Then that should have a reflection on the sales part of it also. Your revenues will also have to go up. And all these three can basically, you can sort of relate that together, all three. Just Mr. Srihari, any question for you from you, sir? No, thank you. Sure. Yes, Ms. Shruti? If you have any question? Because the objective of this course, as I've been telling, is just to give an overview, that's all. And I teach accounting here at IIT and especially for the executive MBAs. And the executive MBA students really enjoy the accounting part of the course out there because I teach only accounting for them. That is to give you that comfort level. If I have to use that word, not make an expert. That is why when Mr. Harshdeep Kaur asked me whether I'm going to ask them to prepare entire solutions in the internal things. No, it's only going to be conceptual test. That's all what I do. Mr. Ranga sir, you had asked me in the last meeting with regard to that you are not able to view one video specifically. I think Suhail.
That was covered in class 4. I saw that cash flow statement for loan example. We got that. Thank you.
Thank you, sir. I think if there is any question, you can also write to Mr. Suhail, my TA. I think he'll just type his email ID in the chat box. If you have a question, you can always write to him or write to me also. That is never a problem for me. My email ID you can always find on the you can always find on the IIT website, and I've also typed in here my email ID. You can always send me a mail or send me a mail to Suhail, and we will definitely get back if there is any question, any issue on that.
Sure, sir. Thanks.
Good evening, sir.
Good evening, Ms. Shruti.
Sir, actually, in the last 2 assignments, I have doubts on 2 questions on each of them, sir. Can I ask them?
Sure.
Yeah. Sir, actually, in the first one, sir, the one that was submitted on 7th February.
Okay.
So the first question was, which of the following is correct with respect to financial statements? So the question was basically about the cash flow statements.
Okay.
So I put the answer as the balance sheet is prepared for a specific period of time. Usually we prepare.
This is the assignment 1, right? Week assignment 1, week 1 or week 2?
7th February, sir. I'll tell you
I will just share the 1 second. I'll just download it and share the paper so that easier for us to clarify also, not a problem.
Right.
Can you share it, Suhail? Yeah, I got it. Fine. First one, right? Yeah. 1 second, I'm just sharing it. Share screen. Okay. You can see the screen. I think it's which of the following is correct with respect to financial statements? The income statement is prepared on a specified date? No. The balance sheet is prepared for a specified period of time? No. It is prepared for a specified date, whereas income statement is prepared for a specified period. Cash flow statement provides details of inflows and outflows of cash. Yes. Stakeholders' equity represents the amount of financing provided by the owners and reinvested earnings out there. So what happens? This is stockholders' equity. We are talking about normally amount of financing that is provided by the owners. Reinvested part of it, we will consider it. But overall stockholders' equity, but in the first week, we did not talk about that. We talked only about the value of the equity per se. So we will keep that only to the value of the equity. Your question now, Shruti?
Sir, apart from I know that it was not covered in week 1, but apart from that, in general, can you please clarify about the 4th option, sir?
Yes, 4th, if I say, what is which is the following statement which is correct? The 4th statement is also correct. Let me also make that clear. Stockholders' equity represents the amount of financing provided by the owners. The amount of, instead of financing can be in the form of debt as well as in the form of equity. So you should have basically what happened if we had used the word stockholders' equity represent the amount of equity provided by the owners and reinvested earnings.
Yes.
Then it will be correct. Because in this particular case, kept it purposely little ambiguous, financing. Where when I say financing, financing can be debt, can be equity. And first week, that was not covered. That is where we gave this ambiguous answer.
Sure, sir. And one more doubt, sir. Cash
Sure,
flow
ma'am.
statements. Does it include cash and cash equivalent or only cash, sir?
Which one? Cash flow statement?
Yes, sir.
Yeah, cash and cash equivalents. That is any of the aspects that can be converted to cash in a jiffy.
Sir, will it include promissory note, bills receivable, bills payable?
Promissory note will be, what do you call it as, that is not that easy. Marketable securities. Normally, cash equivalents are marketable securities.
So here only cash is written, sir. So I thought maybe the answer is little incomplete and it may not be the right answer.
Cash flow statement. That's all cash. Cash and cash. And at that stage in the week one, I took only a cash. Cash equivalents, I used it when I was teaching the cash flow statement per se.
But it does include cash.
It does include cash and cash equivalents.
So does it include bills receivable, bills payable also?
No, bills, not bills receivable, bills payable, madam. Bills receivable, bills payable are not cash equivalents. Cash equivalents are those which can be converted to cash in a jiffy.
Okay, yes.
Quickly.
Yes.
Marketable securities, normally.
Okay.
Okay, ma'am?
Sir, yeah, sir. Thank you. And the second one, sir?
Second quiz, is it? Second week assignment, is it?
No. This assignment only second question.
Okay, ma'am. Dash
Sir,
is concerned with the aspects of acquiring and utilizing financial resources of the firm.
I thought it is financial accounting, sir.
Financial accounting is a statement. It is not concerned with acquiring and utilizing. It is only keeping a record. That is why I said first class in the financial accounting, I said financial accounting is only recording of the transaction. We are not doing acquiring and utilizing.
Right, sir. And the second week, sir?
Second week. I'll just open it, madam. Just give me a minute. I'm just going to the second week assignment. Second week. Share the screen. 2. Yeah. Yes, madam. Yes, Shruti.
Yeah, the 5 and 7, sir. 5. 5
and 7. 5. Retail stores such as Walmart, McDonald's often receive cash from customers at the time of sale. However, Lee Nature delivers its beverages to retail stores and receives a promise of future payment that is called as accounts receivable or debtors or bills receivable.
I thought it is from the payer's point of view.
No. Lee Nature. From the Lee Nature delivers its beverages and then to retail stores and receives a promise of future note. It receives a promise of future note.
Okay, yes, I should have focused more on the word receives.
Yes, madam.
Yes.
7.
And, 7.
What is following? Which of the following is not an asset out there? Investments, obvious an asset. Prepaid expenditure, an asset. My money is with somebody. Land is what I own. Retained earning is not an asset because that is the money that you have to pay the shareholders, the equity fellows.
Sir, I think there has been a small change in the question that we are viewing.
Oh, is it so? I will just look at that. Is there a change here?
I think it's the 8th
one second, madam. I'll just get that. I'll just get that corrected if that is the case because I might have one of the earlier versions possible. I will
here only that is correct, sir. The next question itself is correct.
Next question itself is correct. Which madam? 7, 8.
In the Word document, 8th one.
8th one. Okay. In financial accounting, 1 second. I'll just come to that. Share the 8th one. Yeah, I've shared it. In financial accounting, which financial statement is used to show the sources and utilization of the funds in the coffee company?
Sir, sorry to interrupt you, but I can't see your screen, sir.
You are not able to see my screen. I'm sorry. 1 second. I'm not sharing my screen, I think. I'm very sorry. Extremely sorry. Yeah. Now you are able to see my screen, I think.
Yes, I am.
It is obviously the sources and utilization of funds. The liabilities and equity are the sources of funds. You are getting funds. Utilization happens on the asset side. That is what it is, utilization and sources and utilization of funds.
Okay. I thought cash flow statement.
Cash flow statement, no, madam. Cash flow statement is only receipt and payment of cash.
Okay, it doesn't have to do anything with the utilization.
Thing uses utilization and sources. Please go back to my whiteboard. I would have specifically written these words, utilization and sources.
No, no, you have written it, but I think I'm not able to understand it. Cash will also be receive funds and we use it.
No, what is the source of fund for a company? Can you find out from the cash flow? Yes, I
Revenue
can.
from operations.
Not it is not, but I will not be able to find out all the source of fund from the cash flow statement. For example,
Yes.
somebody is giving me credit when I purchase raw material. In the cash flow statement, it will not appear at all.
Yes, yes, yes.
So that is, I will find it only in the balance sheet.
Right, sir. Right.
Yes, madam.
Yes, all my doubts are cleared, sir. Thank
Thank
you
you,
so
ma'am.
much. It's really a very great opportunity to learn from you, sir. Thank you.
Madam, nothing. I'm just doing basic question. This thing is what I'm learning out there. They're teaching out there, madam. Thank you. I just have one question from Ramnik Singh. I'm going to read it in the chat box. My question is you mentioned that there are 3 types of financial statement, but I have heard according to Indian standards of accounting, there are 4 types of financial statements. Is it true? There are only 3 financial statements, sir. The 4th statement is changes in shareholders' equity. That is what they will talk about. Statement of changes in equity. That is what you have basically said in your IFRS 4. That is because normally these 3 statements are mandatory. Statement of changes in equity comes much later. So later addition to it. Because I'm not even teaching from the point of the accounting standards per se, because that's a completely different ballgame. Because there's Indian accounting standard, there are international accounting standard, then there is IFRS, then there is US GAAP, and it's quite confusing with all this. So there is what is called as then there is an integration of Indian accounting standards with IFRS, and all those issues are there, but it's not fully integrated because US GAAP is supposed to be golden. And I'm not getting into the regulatory issues per se. Any other question? I can take it. You have my email ID also. You have Suhail's email ID also. That is typed in the chat box. You can always note down these ID. And you can write to us also directly. Absolutely no problem. We will get back to you. One of us will definitely get back to you. Normally I travel. If I'm traveling, Suhail will immediately reach me and then we'll get back to you. So it's 7:10 now. Maybe I'll wait for 10 more minutes. If there are any questions or if there's anybody else joining, else we will close it. Yeah, Ramnik Singh, if cash and credit are given in a question and cash is to be received in current year and credit in next year, and we are asked to fill income statement, should we mention both cash and credit or just cash if we have to make an income statement? If the ownership has transferred, I am not worried about cash or credit. If the ownership has transferred, I will take it as a revenue that has accrued. If the ownership has transferred, I will take it as an expenditure that has accrued if I have sold. If I have received cash without the ownership being transferred, then it is an advance. If I have received cash after ownership is transferred, it is a revenue out there. My cash balance increases and my revenue increases. If it is a credit sale, cash is not received, accounts receivable or debtors will increase out there. Am I clear, Mr. Ramnik? We will try to launch the same course, I think. I mean, not for you. Couple of times in a year. I think 3 to 4 times in a year, 3 times in a year, I think they plan to do the same course. And if you feel that there is some learning and you've learned it, you can always recommend it to your friends who want to pick up some basic out there, if you feel it adds value for them. Yes, Mr. Vignesh, any question from you? As Mr. Ranga said, then the ratio is possibly, yes, a little fast. I think now that's what we also realize, and we will try to see if we can edit it or extend it a little more for the next batch. Or that's a feedback which I take it, and we will try and see that if we can improve it for the next batch out there. And because we had planned it for so many weeks for accounting, financial, so many weeks for cost accounting, I think initially I spent a little too much of time in the basic financial statement. So when we had to close it, I think I was rushing a little bit on that. Possibly. The feedback is taken, sir. We will do it. Sir, the exam dates, etc., are not decided by me, sir. It's all decided by NPTEL. You will have to get in touch with NPTEL, and then possibly they will have to do it, sir. Yeah, 5 more minutes, I'll wait in case of any question or in case anybody is joining, else we'll close the session, sir. We will have the next live session 2 weeks from now. Every 2 weeks we're having. So 2 weeks from now, I think, depending on the schedule, either on a Monday or a Tuesday, we'll have it at 6:30. I hope Monday or a Tuesday is fine with all of you. Depreciation is not considered as a cash inflow, sir. We just, Mr. Vignesh, we are just adding it back to the profit because depreciation is not a cash outflow. As far as the cash is concerned, depreciation is not it is an expenditure, agreed. It is not a cash outflow. When you say machinery is depreciated by 5,000 rupees or 10,000 rupees, you write it as an expenditure. That means that is the extent to which you utilize the machine. So you are writing it as an expenditure. In real sense, the cash does not go out of the firm out there. There is no cash outflow when you write depreciation because cash outflow happens when you purchase the machine. So when you do a cash flow statement in an indirect method, what happens is you take the net profit. You add back all the non-cash expenditure because the net profit is arrived at after deducting all the expenditure. Depreciation is a non-cash expenditure, so add it back to the net profit. When I add it back to the net profit, I know what is the cash balance I will have. Am I with you, Mr. Vignesh? Depreciation as such is a non-cash expenditure. Interest generated from loans come under cash flow, finance and operations. Loan that you have taken comes under what? Comes under financing. That is because I have been financed my business out. When I pay interest on that, there is a cash outflow because of a financing activity. Weekend is better for a live session. Let me try, sir, because I am not sure the weekends I'm here because most of the weekends I travel. Let me try and see if I can have it on the weekend. Otherwise, let me try what best I can do on that. Because now Friday, in the next couple of weekends, Friday, Saturday, Sunday, I'm traveling on my field assignments and some assignments out there. Because I do some bit of consulting, and so we keep traveling on that. Consulting and corporate training, so we travel on that. Finance and operations cash flow. Okay, examples of bank giving loan in this case. Sure, Ramnik. Cash flow from financing activity. I take a loan from the bank. That means what is happening? I am financing my business. So if you look at the balance sheet, when you take a loan from the bank, the loan what you have taken will appear on the liability side of the balance sheet as a long-term liability. So it is a debt to equity ratio. When I talk about it is a part of debt. So what is happening? Any interest I pay on that, it is a cash outflow because of a financing activity. When I take a loan, cash inflow because of a financing activity, because cash is coming to me. When I repay the loan, cash outflow because of a financing activity, money is going out of it. Now I look at operation cash. I sell goods. I receive money on that. Cash inflow because of operating activity. I purchase raw material. I pay cash for that. Cash outflow because of a finance, because of a operations activity. I pay my salaries to my employees. Cash outflow because of a operating activity out there. Whereas when I take up a bank, this is for an industry. For a bank, what is the operation? Core operation is giving loan and collecting receipts out there. So the cash what happens when they give a loan from a bank, when a bank gives a loan to somebody, for a bank, it is a cash outflow because of an operating activity. When the loan is repaid, what happens for a bank? Cash inflow because of an operating activity. It is from the core operations of the bank. I hope I'm clear, Mr. Ramnik.
Sir, one last question or suggestion, if I am permitted.
Sure, sir. Please go ahead. Please go ahead.
Yeah. Sir, you said that the text will be released in a while. Probably they will quote it will be more of a transcription of what you spoke.
Yes, sir.
So we like your classes mainly because your class is in a conversational style, right? Now, much of it will get lost in the transcription. If you directly publish transcription, probably some amount of editing and texting would be required.
Yes.
Do you think that is possible?
Yes, sir. Because transcription is not, there is a we use the software to transcript first, then it is edited twice, edited by Suhail once and then edited by me personally also. That is where there is a delay, because I'm unfortunately not finding time to edit. So we edit it a little bit.
That would be helpful, sir. Thank you.
That is why it's taking time, sir, because Suhail has done the editing for 4 weeks. And I have been able to do the editing only for 2 weeks. So after he edits, I edit again, and only then it will go up on they will go.
Thank you, sir. The only reason I asked was one of the earlier courses I did in NPTEL, the transcription was exactly as it is, and it was losing. I mean, obviously, it was a difficult experience to read. It was a different experience when you listen in the class. But when you read, it's not very comfortable. So since it is taken care, I am happy, sir. Thank you.
Sir. We have not made it exactly like a textbook, but we have sort of kept the boundary to what I have discussed and kept it only within that. Well, there is a software which does it, but there is editing which happens, sir. First 2 weeks we have edited, right? So 3 weeks. First 3 weeks we have edited, and I think they will also be uploading, or they should be uploading. There are 2 documents which will be there, sir. One is the transcript, another is the notes. Notes is what I edit. Transcript could be a little milder version of what Suhail would edit, but notes is what we both edit. So you can refer to the notes for the first 3 weeks. If you feel there are issues, you can please get back to, you can please send me a mail or send Suhail a mail. We will take care of it for the next couple of weeks after that.
Sure, sir. Thank you.
Okay. I think there are no questions. Then we will close the session. Okay. Thank you. We'll get back in 2 more weeks from now for the live session. Thank you very much. Thanks for your participation.
Thank you, sir.
Thank you.